Alright guys, welcome back to another video. This is actually this is a late one for me. So this is a weekly price action journal for the week just gone. Now, typically, I tend to record these raw, doing the annotations as we go and so on and so forth. However, following a sort of a busy Saturday where I actually did all the annotations and the large majority of the work, I actually forgot to record. And to be fair, I was pressed for time, so probably recording wouldn't have been the best idea. Just as I said, with how sensitive time was. So what I've decided to do is just go over the weekly price action journal for my entry for this week, some of the key touch points, the rationale in why I was thinking what I was thinking, and just as a general outlook for price, with again a lot of self-talk, which is important when carrying out these things. It's, to condition the mind, or as ICT once said, and various other people have referenced this term. It's almost tricking the mind into a false sense of belief, but one that empowers your actions moving forward. So, I like to employ that in a lot of my journaling, and I think it's a fantastic way to learn. It's a fantastic way of really focusing one's mind on the key things and then sort of building on that. So, let's get straight into this. We have the weekly chart in front of us for ES. So, my general view going into this week, and certainly if we're looking at the economic calendar had high impact news on, if I recall, Tuesday, Wednesday, Thursday, with FOMC statement on Wednesday. So, so for me, I was predominantly looking for the low of the week to form on Wednesday, which is obvious. It was the highest volatile day. Therefore, with a bullish weekly outlook. Now, why was I bullish? Well, firstly, we had we had this BPR down here, weekly BPR right in here. Okay, so we've got that in here on ES. Now, NQ did overshoot this significantly, which could have given the impression of lower prices, but fundamentally we have this BPR here, which was respected on ES, and then ultimately price retraced the majority of this candle. So that gave the inclination that we're likely targeting this high, and if we're targeting this high, the all-time high is in close proximity. So that already for me gave this outlook of this week here, that we are likely to see higher prices. Now, you're seeing this candle because it's the new week, but again, I'm recording this as we go. So that was just sort of a general overview of what I was looking at. So, I want to be buying below the true week open, see higher prices. So if we drop down to the daily, where sort of our analysis begins. So as we see on the daily here, I annotated this BPR. Now, we had SMT at the lows here, which for me, part of my models, is what initiated this impulse price leg. Now, part of the impulse price leg, we can see that we have unfilled BISI here. Again, indicates to me that the market is in a rush to get to some form of liquidity above the marketplace, which we've obviously got these relative equal highs here, and then we have the all-time highs over here. So clearly for me, heading into this week, where if we look at Monday being here on this candle here, we're looking for the expansion higher. We've traded above, formed this balanced price range here. We've got a small inefficiency just there, which again was kept unfilled. So that was a real key indicator for me to view the weekly expansion to be likely to the upside to attack these liquidity pools. Okay, so that ultimately is what I was looking for. The key takeaway there was that clearly institutional order flow was bullish, and we had a balanced price range which supported bullish institutional order flow, and we had some upside objectives which um, gave the market a clear high time frame drawn liquidity. Okay, so if we go down to the 4 hour, where the crux of what we're looking at now begins. Let's just get this. Okay, so again, Monday for me, despite the fact, well, there was no news on Monday, so I was looking for largely consolidation, and to be perfectly honest, I was looking for consolidation for the early part of the week, heading into FOMC, and then FOMC is where we'll get that real volatility. Excuse me. So ultimately looking for higher prices. So I note the high time frame correlation between Tuesday and Wednesday into market SMT. If you go and check the FX triad, so dollar, EU, GU, or even check the interest rate triad of the 30, 10, and 5-year bonds, you see that there was, or certainly just if you check FXT, okay, we had a kind of correlation between dollar, EU, and GU at the lows. So that was the rationale for, or what initiated the higher prices. We've obviously ran liquidity below the previous day's low of Tuesday, and if we look across all three members, they all ran that liquidity. So the initiator came from the fact that dollar wanted to see lower prices. Now that for me, although below the true week open, for me is not the basis of a trade. It can be, but it's not for me. That just gives me confirmation of we're seeing higher prices now. Admittedly, had this been SMT between the index futures triad, so between ideally ES and NQ, that could have set the framework for a trade idea higher. Okay, so the market displaced higher, confirming institutional order flow now to the upside, targeting initially the FOMC data highs, which is previous day's high of Wednesday. Right. As you can see, if we just reference back below, we've got the clean swing lows here. So again, we had a hard time frame cracking correlation between the index futures triad, the members, that would have supported a trade idea for me to look for higher prices. Okay. Now, yeah. So as I said, institutional order flow. We've got we have a BC in here as well, overlapping this old high, and obviously we had this close above the old high here with a fair value gap that ultimately formed following this candle. So that already gave the indication that we are likely seeking the liquidity above the highs here. Okay. Then ultimately, as we've traded above, purged some of the liquidity above here. Whether that's a deep enough purge remains to be seen. We'll have to see what the market presents. The market's obviously traded back down, found a level of support inside of this BC H4, where we've traded higher, taken out the external range liquidity above this old high H4. Okay, so that is the general outlook. And finally, we obviously have premiums discount measurement here. Why have I taken this? Well, on the H4, again, we've seen the high time frame cracking correlation here, so we know that a level of accumulation is taking place at this level. We've ran some lows, accumulation's taken place, manipulation down here at the lows, and therefore we've now got this range up here. So price retraces back down, as we can see, wicks into a to a discount of this dealing range. Bodies of the candles are respecting the BISI here, and then the market obviously trades higher to the old high, external range liquidity. Okay, so let's drop down now to the hourly, where and let's get that like so. Yeah, okay, beautiful. So if we look at the hourly chart, we can discuss. So one of the key things that ultimately I mark up, obviously we're doing a top down, which is important. I've marked up obviously the key hourly liquidity pools that at the particular time that I was focused on, so largely being the London highs and lows, or the Asia highs and lows. Typically they are the main ones, and occasionally it'll be the New York. So what we can see here is, so on Monday the market opened around the true day open, and we can't, because of the start of this Monday here, we don't have the true day open over here, but the true day open is roughly horizontally to there. Okay. Before obviously setting the buy side liquidity for London, and also the buy side liquidity for the sell side liquidity for London, right? And then as we enter the AM session, we can see how the market trades down, small purge, trades higher, small purge, trades lower, a larger purge of all the liquidity resting below, before returning higher to purge, a deeper purge of London, setting the previous day's high, or certainly the high of the day, should I say, before returning back into the range around the true day open level, where it consolidates for the remainder of the day. So this clearly is a seek and destroy daily profile. So low probability conditions, as we know, no high impact news to inject any volatility into the market, and it's one of the reasons why I tend to sit out Monday. Because I like to see what is Monday going to deliver, in terms of providing some form of context for the remainder of the week. But however, with FOMC on Wednesday, that could also play into how Tuesday would perform. So heading into Tuesday, so now we've got the confirmation of the true week open, which is formed. The market opens, begins to reprice higher. Okay. Where it purges the previous day's high, so all the liquidity resting above there, continues to reprice higher all the way through into the New York session, where it forms the high of the day. Now that occurred on all three members. So for me, in terms of my models, there's no trade opportunity there. Okay. The market tapped into the old high, as we can see here, tapped into that, engaged level of liquidity, buy stops above there, before displacing lower and forming the low of the day. So we've got that displacement here, a fair value gap here, which could be used in terms of supporting for lower prices if one was looking to take lower prices above the true week open, or that PD array there could be certainly used. So we've seen that, and then obviously we've got this retracement following the creation of the low of the day. The market trades back up and essentially into EQ of the daily range, where it consolidates for the remainder of the day. So right now, for Monday and Tuesday, we're seeing that early week consolidation. heading into FOMC Wednesday, where there is the likelihood of volatility in the New York PM session. So going into Wednesday, again with the anticipation of FOMC, which is this high impact news line here, we can see that the market opened and consolidated for the majority of the London and the New York session in a tight consolidation, creating open flow above and below the marketplace. So for me, we then see the market trade lower below the true week open, purging the sell stops below the SSL London. Before repricing higher, and then obviously we have the numbers release where we see this huge wick higher, and then the market ultimately retraces lower, purging the liquidity below the sell side, the H1 liquidity pool here, and this is where then we see the SMT between the FX triad, creating this lower low. Well, I say creating the lower low, it's not necessarily creating a lower low. All three members created the lower low, but we have the Kraken correlation on the FXT. That was the catalyst then, and the framework for seeing higher prices. So again, had this been between, for instance, ES and NQ, this is a framework for me then to take a high probability long. Okay, so following that, remember we have two-stage delivery for FOMC. So we had the first stage, which was higher, form the high of the day, and then the second stage delivery, the market retraces lower, purges the liquidity below the previous day's low, this H1 liquidity pool, and then the market displaces higher in its original direction. Okay, so now we head into Thursday. The market opened, immediately displacing higher, purging the previous day's high, so the FOMC data high, purge that, and that can be a draw, a high probability draw on liquidity. So the market traded higher, at which point has formed the BISI H4, but it displaced higher but failed to tap into the all-time highs. We then saw this retracement. This aligned BISI, the market trades down. We see PDA SMT here. I believe between, I want to say YM. Let's have a quick look. Why not? Why not? Let's have a quick look. Let's have a quick. Was it YM? So overlapping fair value gap. No, it wasn't YM. Apologies, it must have been. Let's have a look. Yeah, I think it's. Let's go. Let's go back. Right, so there's the overlapping. Look at that low here, low there. So it's with NQ. Okay. So So just for completeness, let's just pop that in. Okay, there we go. So with NQ, this sets the stage for a model trade higher. I didn't take this, but targeting BSL H1 and also all-time highs, the market trades up through, sets the high of the day before retracing back into the daily range and consolidating for that remainder of the day. Okay, so then we head into Friday. Again, the market opens in a consolidation with relative equal highs, as we've got here. I've only marked them up to here, but relative equal highs. Before we saw, during the New York session, this displacement lower. Trades down into this BC H4, where I notice high time frame PDA SMT with NQ. This sets the stage for higher prices, targeting the external range liquidity of the old high, the relative equal highs. The market starts to displace higher. We see this BCH1 formed here, where the bodies of the candles are respecting, and ultimately the market continues higher and purges, taps into that H4 ERL, comes back into the BC, consolidates, and then obviously the remainder is, you know, we head into Sunday and so on and so forth. Okay, so the key thing is to, as we always do, is to run through top down of the entire week, focus on the key elements of your trading model, the key things that stuck out, and then the final thing that you want to do is just whatever your key takeaways were, right? Which is important. So identify your key takeaways from the week's price action, things that are going to ultimately help you improve as a trader. Shout out here, by the way, to Sniper and his forever model. That's his forever model here. You know, it's not my model, it's his model, but utilized here. So a really good model. Urge you guys to go check out his content. Really good stuff that he puts out, in my opinion. So yeah, go and check that out. But yeah, you know, then you want to capture any characteristics. What was the weekly profile? How many pips do the week deliver? Yeah. What was the bias for the week? That sort of thing. So that is the, you could argue, refined version of the weekly price action journal. And again, it's just purely because I'd done pretty much all of it prior to going out on the weekend with the kids. But I felt it was my duty to record and just run through the key things that I was looking at during the week and what formulated any trade ideas and what my takeaway was from the week. So hopefully you found something insightful there, something useful that you can take away. Maybe there's a few light bulb moments in terms of what you can add to your own weekly price action journal. Remember, it's important to do. Do not skip your weekly price action journals. Do not skip them. Highly, highly important. And I would argue it's probably where the largest level of improvement through development will occur. It gives you the opportunity to take a step back, have a look at price action, overlay any models, any key price action indicators, things that you weren't privy to that now you're aware of, that you can go away and gather data. And again, gather data is key. Don't just go and gather one piece of data and that confirms an idea. You need to go away, produce, you know, a comprehensive spreadsheet to support any idea that you have, you want the data to positively correlate with that idea, which will ultimately create then the framework of you being able to implement that into your models. So again, hopefully this was useful. Still a raw take, but just obviously with the charts marked up prior. But again, the key focus of this session is the weekly overview, the weekly price action journal, the analysis of the weekly price action, where key opportunities occurred, key signatures occurred in the market, and how the market ultimately reacted at certain times. So I'm going to cut this one there. We will obviously record. Let me know in the comments actually whether you preferred this shorter but raw take version, or whether you prefer the longer version when I'm drawing things out right in front of you, and so on and so forth. So let me know in the comments. But have a good rest of the day, and I will catch you guys in the next one.